Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is July 5th. This is actually the first one of the week, even though it's a Wednesday. I did not do one on Monday, and yesterday was the 4th of July. Hope you had a great 4th of July. Again, it is July 5th, and we are going to take a look at H.B. Fuller. Let's jump right into the video. Now, H.B. Fuller, if you want to know more about him, check him out, www.hbfuller.com. That's www.hbfuller.com. That is their homepage where I pulled this information from. They are out of the materials sector, and for 130 years, H.B. Fuller has been a leading global adhesives provider, focusing on perfecting adhesives, sealings, and other specialty chemical products to improve products and lives. H.B. Fuller's commitment to innovation brings together people, products, and processes that answer and solve some of the world's biggest challenges. Our reliable, responsive service creates lasting and rewarding connections with customers in electronics, disposable hygiene, medical, transportation, clean energy, packaging, construction, woodworking, general industries, and other consumer businesses. Our promise to our people connects them with opportunities to innovate and thrive. So basically, they are a material provider for a lot of different industries here, right? And you can see up here all the way back to 1887 to 1940 here, Harvey Fuller moved to St. Paul, manufactures flour and water paste. Harvey Fuller invented unique scaffolding. H.B. Fuller Company Incorporated. You can go through the rest, and like I said, if you want to know more about them, check them out at their homepage where I pulled all this from. It goes right through from the 1887s to present in about a 10, 15 year span in chunks. Let's go over and see why we're looking at them today. We are talking about H.B. Fuller Company, ticker FUL, again out of the materials sector. Down 4.70%, closed the day out at $68.27, 52-week range as low as $57.36, as high as $81.41. So they are kind of floating in between that 52-week low and that 52-week high. Average volume 313,000. Today was 313 million. Today's was 540 million. So definitely more activity today, and it was pretty much a sell-off right from start to finish. Market cap of 3.675 billion. The beta for Yahoo Finance, where I pulled this information from, was not available, so I went over to stockanalysis.com. They say their beta is 1.52, so they are more volatile than the overall market. Price to earnings PE ratio is 23.14. That is elevated, though their forward PE is a lot lower. Price to earnings there a little higher than I would like it at $23.14 per share. Earnings per share, EPS sitting at $2.95 per share. Not bad there. Next earnings date somewhere between September 19th and September 25th. This one does have a bit of a low dividend yield at 1.27% and pays out 82 cents quarterly. We'll see that here in a minute how that breaks down. Ex-dividend date was April 19th, and they paid out on May 4th. So if you bought them now, you would be in line for their next dividend. And according to Yahoo Finance, where I pulled this information from, they have a one-year target estimate of $87.50. Let's go over and check out dividend yield theory. You go under statistics, you'd find dividends and splits. Drop down to their 5-year average, which is 1.22. Compare it to their current or their forward here, 1.27, current 1.27, same thing. And if it is higher, which it is just ever so slightly, this speaks to some undervaluation, though I would call this really fairly valued, right? It's so close. They're 1.27. When you've got to get out to that second digit, it's really you're cutting hairs here. So fairly valued, slightly undervalued according to dividend yield theory. Very low payout ratio on this one, 25.68. So though it is a low dividend yield, it is a very low dividend payout ratio and a lot of runway to raise that dividend. And let's see how fast they're doing that. We'll see that in a minute. We want to jump over to free cash flow. If you were to go into financials, you'd find a lot of information. You'd look at their income statement. You'd look at their balance sheet. You could see their revenue. You could see if they're buying back shares. You could see what we're going to look at here, free cash flow. We want growing free cash flow over time because that's what the dividends are paid out of, and we want growing dividends. So to have that, we need growing free cash flow. 2019 was 207 million. 2020 was 244 million, all looking good there until we hit 2021, dropped down to 117 million, big drop there from 2020 to 2021, and then started growing again back in 2022. Looks like to date 151 million from 126 million last year. So overall from 2019 to date, unless we get back in the twos by the end of the year, there's a little bit of negative free cash flow, but from 2021 to today, there is growing free cash flow. So I would say over the last 3 years, growing free cash flow. Now we'll jump over to stockanalysis.com. I always recommend more than one source. So the one you saw previously was Yahoo Finance. I mean, there's a lot of sources out there. Just make sure you're looking at more than one, like we saw on this one. This one did not show the beta, whether it was more volatile or less volatile than the overall market. So I had to look over here at stockanalysis.com and find that. So you want to back check and make sure the information you are getting is accurate. That's why I recommend more than one source here. But anyways, according to the 4 stock analysts, so it's not a lot that have looking at this, but taken a look at this, but they say a consensus buy. They have a low estimate of $60, pretty close to that low estimate right there, which would be a 12.11% decline from where it currently sits. They have an average estimate of $83, and that would be a 21.58% increase. And that's pretty much in line with what we saw from Yahoo Finance. They're saying it was going to be around $88 over the next year, so pretty close to their average. And if it happened to hit their high average of $107, that would be a 56.73% increase in the stock price. All the while, you could collect that 1.2% dividend yield. Now, another one that I like to look at, and this presents the same information stock analysis does, financials. You'd find their balance sheet, their income statement, their revenue, all that. Statistics is where I like to look at for return on equity and return on invested capital. I like 10% or better, and this is really close. Return on equity sitting at 9.7%. Return on assets 3.5, and return on invested capital, the other one that I like, is 9.9, right up against that 10% that I like. So I could, forgive them for being ever so close, but falling short on this one. Let's jump over to their dividend and see how they're doing there. Now, I didn't clip it, but I went all the way back to 2013. They have been paying a growing dividend since at least 2013. So let's say the last 10 years pretty consistently. As you can see, I went back to 2020 here. They were paying 16 cents and a fraction of a penny there. 2021, they stayed the same. 2020, nope, I'm sorry. They jumped it up in 2021 to 16.16 from 0.1625 to 0.1675, so still fractions of a penny, but a little higher fractions of a penny. And then in 2022, they jumped it up from the 0.1675 cents to 19 cents. They rode that up, and recently, here in April, they raised it up from 19 cents to 20 cents and a fraction of a penny there. So they are growing the dividend over time. Dividend growth 11.91. Again, real low payout ratio in the 20s, 28.98 here. So pretty fast growth on the dividend and pretty low payout ratio, so they can continue to grow that over time. So overall, this is a good one, other than it is a little lower than the dividend yield I'd like to see. So if you could wait for a pullback on this one back into the 50s potentially, that would bring that dividend yield up into the high, single digits, 1.7, 1.6, somewhere in there, which would be better in my opinion. At 1.2, it's a little low for me, but if you had a long time horizon for this one, 20 years, 30 years, this would be a good one to sit back and let this 11.91% dividend compounder grow over time. That's what I think about H.B. Fuller. I'd like a little bit of more of a pullback into the $50 range. 56, 57, 58, right in there would be ideal for this one. So a little rich for my blood, though. If it continues to pull back, might be one to look at. Maybe worth throwing on the watch list. All the numbers look pretty good on this one. This is the vested interest stock screener. You can pause it, go through this at your leisure. And that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share stocks like this one. Let me know what you think of H.B. Fuller down in the comment section below. Do you know companies like this one that you like better? Love to hear from you. Is it in your portfolio? How is it done for you? What other stocks are you watching? I do personally read and respond to the comments. I'm always interested to read your questions and or opinions, suggestions for future topics. So if you have a stock like H.B. Fuller you'd like me to cover in the Stock Pick of the Day series, again, drop it down below in the comment section. Don't forget to hit that subscribe button and hit the notification bell so you're notified whenever we post any new content. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk and money. Should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.